very much. Good evening. This is Chris DeWitt, Vice Chairman of the Board of Finance, and I'd like to call this quarterly meeting to order. Can we all please stand for the Pledge of Allegiance? I pledge allegiance
to the flag of the United States of America and to which stands one nation under God,
indivisible,
indivisible, and justice for all.
Thank you very much. Mr. Brown is actually out of town on business today, so I will be officiating the meeting tonight. So thank you all for being here for our quarterly meeting. As usual, the public may send their comments pertaining to an agenda item before or after the meeting to the following email: bof@fairfieldct.org. As you would in a public meeting, please include your name and home address with your comments. All comments received and verified will be included in the minutes with your name and home address, but your email address will be excluded. Start the meeting tonight, just a moment of personal privilege, if I may. To start off, I'd like to welcome Mr. David Fogel to our board. Mr. Fogel comes to us with a long list of financial-based experience. David was the former chief of staff at the Export-Import Bank of the United States and a former senior advisor in the Economic Division of the State Department. David also served on our Town of Fairfield Economic Development Commission. Dave was just confirmed today by the Board of Selectmen, so he's had a busy day on the boards. So congratulations and thank you for being here. And we're very happy to have you on the board, Dave.
Thank you. Appreciate it. Look forward to working with all of you.
You as well. Oh, and Mr. Walsh is here. Very good. Second moment of personal privilege is I'd like to thank Mr. Ed Bateson. Unfortunately, Ed's not here tonight, but Ed resigned his Board of Finance position to fill an opening on the RTM, and he thought that was a crucial role that was to be filled, and so he's now an RTM member again. Ed has been a Board of Selectman, he's been on the Board of Finance, he's been on the RTM multiple times, and Ed just goes where Fairfield needs him to go. And once again, he's shown his dedication to our town by leaving the Board of Finance and going to the RTM. So we wish him good luck there. The RTM is a better body for having him, and we look forward to having Mr. Fogel on in his stead. So, if I may, we'll move on to agenda item number 3, to review the current status of the town's pension and OPEB funds. May I have a motion to put this before us? Ms. Marmion, seconded by Ms. LeClaire. Well, good evening, Ms. Carolyn Tribuco, our Joint Retirement Investment Board Chairman. If everyone has their backup presentation, Ms. Tribuco has given us a very nice presentation starting on slide number 1. So, Ms. Tribuco, up to you.
Sure. I was just going to kind of give you the quick update and allow you the time to peruse the presentation material, which we receive monthly from Vanguard, our OCIO, and breaks down our performance by asset class, by investment, and gives us a nice overview of the markets. This is the March quarter end update, and let me just kind of break this down for you. Pension assets are presently at $448 million. We were up 29% year over year. That's an increase of over $100 million year on year. In the OPEB funds, we presently sit as of March end with $70 million of assets, up 40% year over year, which is by any measure, terrific market performance. The difference between March quarter end and December quarter end in each fund, we were up 3.21% March over December, 3.25% in the OPEB March over December. The real reason for it is just we've continued to benefit from very broad market exposure and an overweight allocation toward equities. Presently, the pension fund is allocated 56% equities, which continues to be split 60-40 US to non-US. We have 31.3% of the fund in fixed income, split 70-30 non-US to non-US. We maintain an exposure to private equity of about 6.8%. Real estate's at 4.8%. We no longer have any allocation to hedge funds or commodity funds. And our cash exposure has been just under 1% at 80 basis points. The OPEB, as I mentioned, is a little more tilted, even more heavily tilted toward equities. As of the March 30 quarter end, we were 74.4% allocated into equities, and that was split 60-40 US, non-US. Our fixed income exposure was 17.8%, real estate 7.8%, so a little higher than the pension exposure, and cash was, statistically speaking, at 0%. We've had to reallocate, which is a good problem to have, on the OPEB fund. We have a hard stop at 75% allocation to equities, and we hit that during the month of March and had to reallocate away from equities to keep the allocation below our threshold. During the quarter, I thought I'd give you a little update of we've been a very busy board, the JREB. During the March quarter, as you are well aware, we brought forth the actuarial valuations for both pension and OPEB. We updated our investment policy statement, our IPS, where we made two changes. One, we included language in the proxy section to underscore the importance of being a long-term investor and our fiduciary duties being consistent with the values and principles around ESG, which is environmental, social, and governance considerations. This was just a statement that these things are important, and we would like to make sure that the town knows that we're looking at these factors. As you know, Vanguard, our OCIO, votes our proxies. They're already doing great work on this front. The second thing we updated in the IPS was our target asset allocations. You will find those on our JRIB website, on the town website. The important changes we made there was we tightened our minimum maximum bands in different allocation categories to 10%, down from 20%. So equities will be a target allocation of, say, 55%, but the minimum exposure is 50, the maximum exposure will be 60%. We also consolidated into fewer categories, which was consistent with our approach of moving to Vanguard as our OCIO. And we maintained the overweight tilt toward equities, which are targets 55% in pension, 70% in OPEB. The other big news from the JRIB is that we have changed our actuary. We ran a long and thorough RFP process. If you remember, in mid last year, the JRIB voted to conduct an RFP for a new actuary. We had the previous actuary for 20 years. We worked with the town. Jared Foley within the town walked us through the RFP process. We put it out to the community in late December 2020. We had 11 respondents. We formed a subcommittee with 4 JRIB members and 3 town officials. We whittled it down as a subcommittee to 3 who came in to present to the JRIB. Milliman was the firm that was selected. And I'm happy to say that yesterday, the Board of Selectmen approved our 5-year contract with Milliman. So that allows us to begin the transition, which ideally we had targeted to have that coincide with the turnover of the fiscal year, so that we would not interrupt the valuation process and timing that feeds into your role on the Board of Finance. Lastly, this is going to be my advertisement. If you recall, last quarter when I came, I had mentioned that our July 28th meeting will be the meeting we set to discuss our discount rate. And I fully expect that discount rate will be lowered. We have not had preliminary discussions by how much or over what period of time. If you'd like to attend, I think we'll be in person by then. Should be a good meeting. But I do want to make sure that that is on your radar. And with that, that's what I have. The presentation's there, and I'm happy to take any questions.
Thank you, Mr. Bucco. Mr. Schmidt, do you have the meeting information for the JRIB for any Board of Finance members that might want to attend?
I can send it to you all after the meeting, after this meeting, sure.
That would be great, just to give everyone the opportunity and make sure that they have that exposure. Thank you, Mr. Bucco, for the invitation. Would any Board of Finance members have any questions? Mr. Walsh?
Good evening, Mr. Bucco. Thanks for being here. In the future, I don't know how the rest of my board feels. I just tell you from as one board member, I think I find it more useful when you handle one of the funds at a time, because the materials are split out as one fund. So usually we handle like the pension fund and can ask a bunch of questions and kind of go through it and all that stuff. Then we go on to OPEB. And in order to follow the presentations that we get, it might be more, I would find it more useful to kind of track those two reports as we're going through it, and then we could line up our questioning.
Yep, happy to do that. Happy to do that.
That'd be great. Before I forget this question, in regards to the JRIB meeting, you said it's July 28th?
Yeah.
Would you be able to get us a sensitivity analysis on what the changes will be, or have our new actuary prepare that in advance of the July 28th meeting, so we can get it out to the public and the newspapers and everything else like that? Because it's kind of an important meeting when you set that. And I think everybody should have some idea when you're kind of going through that, what that will be and what the changes that you all decide will be, and we can track it as the conversation goes.
I'm happy to explore that and how that would go. We generally, ask for an analysis ahead of time. We get a nice layout of what would actuarially happen to the numbers at different levels. I'll do my best to get it out from them as soon as possible to give you ample time to review it.
That'd be great. So in regard to the numbers again, in regards to the pension fund, you said the asset value had increased how much in the past year?
Well, so it's March to March, right? So
Yeah.
the pension fund was up 29% year over year. So ended March 30th at $448 million. So that would be close to $130 million increase.
Okay.
Now there's a lot to unpack in that, right? There's a lot to unpack in that. Part of that was, if you remember, March was when we entered COVID and the market fall off. Right, and so part of that is picking up what was a real sell-off at the end of March of 2020. But I certainly don't think that year-over-year performance is going to be repeated. Another piece was that we had moved over to Vanguard in the month of March, so we had the benefit of two things: one, having a nice low cost basis for that equity exposure, and two, changing the allocations to be much more broadly exposed to the total market, and so those were the two major things that I picked up by reviewing it.
Okay, the losses that we had as COVID began in last March, as you mentioned, did we fully make them up?
Yeah, we fully made them up.
Oh. And did we surpass that?
We did.
Okay, by how much?
I didn't do the numbers ahead of this, and I certainly don't want to give you a number out of turn. I think we probably hit a low at the end of May. I'd have to calculate it and get back to you, but by a healthy amount. I mean, if you look at the presentation, right, even on a 3-year performance in pension, we're up close to 8%, 3-year annual.
Okay. And will that have an effect then on the next time we actually get an actuarial amount for the budget season for next year?
Well, so the question is, how will it affect the ADAC, right? I mean, our hope, our goal is, of course, to be able to to deliver an investment return that is in excess of that discount rate, right?
Yeah.
And it certainly looks like, although, you know, it's too soon to call it, right? We won't call it until June 30th. But we are looking to be in a pretty good position for that.
Okay.
Okay. But that, you know, I'm not going to call a market before we've gotten there.
Okay. And are those gains spread out over a 5-year period, kind of like some of the losses are?
No.
No? Okay. All right.
Nope.
Okay. All right. And where do we, there's litigation currently going on for some of the losses you took in that one fund?
Yeah. And I don't have anything to report on that other than it is moving forward.
Okay. So there's been no settlements that have added to the fund at all or anything like that?
No. The only thing I could say is that it seems that there have been more investors in that particular product who have also entered into lawsuits.
Okay. All right. And going down to back to now the OPEB fund.
Yep.
At what point, and I know your predecessor had talked about it before with us, but at what point does the money get managed more broadly like the pension fund does? What dollar value? Or is it currently being done?
You know, it's an interesting question, and it's one that we've discussed over several meetings in a row. And we take these discussions with the help of Vanguard and their capabilities coming to us. And I think you'll find that the board with Vanguard is really reluctant to put a number on that to when you might change the allocation. In fact, it's much more of a view at this point of holding that equity overweight. That's something that Vanguard's recommended to us. That's something the board's discussed, and it's something we voted on specifically when we voted on the IPS in the March meeting.
Is that because you guys are chasing a higher return?
No, I think it has a whole lot of things behind it. It incorporates a view on where equities are, where yields are in fixed income, kind of where the opportunities are more broadly in the market. I think there's a sense that having a total market product rather than picking fund managers or picking subsectors offers a degree of diversification that allows you to stay overweight equities. They're really, you know, there are, I mean, half a dozen reasons that Vanguard kind of researched for us to help us make the decision to stay as overweight as we are right now.
Do those decisions have anything to do with the fact that, you know, the request for these funds will, you know, because when people retire, there's going to be for, you know, maybe later on or whatever, and there's plenty of time to make up the money. I mean, is there differences between a pension versus post-retirement health benefits?
I don't think anyone's kind of cut it that finely to think it through that way. I think there is some thought of the underfunded status of OPEB kind of gives us an opportunity to go out there and try to generate, you know, kind of be a little further out on the equity risk spectrum. I can speak on the pension side, and this is me personally thinking, and something we need to think about more. You know, we've got two pension funds, right? Police and fire, and then town retirement. And the town employees is closed to new members. And that one should run out sometime over the next 20 to 25 years. And coming up with about 10 years left, the board would have to make some serious adjustments to how the funds are allocated, right? We have to become far more conservative with it. But we're probably 10, 12 years away from that. So not having those discussions yet about the allocation. It did come up regarding how we might allocate more funds to private equity, because those can be 15-year events. But not specifically to the question you raised.
All right. One of the reasons I asked some of these questions is because your predecessor had mentioned that we were getting close to it, both funds being basically managed the same, and now there seems to be a change in philosophy
Yeah.
that you're talking versus what he was talking to our board about when he would come before us on a quarterly basis.
Yeah, and I think that comes from transitioning over to having Vanguard as a co-fiduciary with us, and all of their capabilities and all of their depth of research and market, and market participants and market research coming to us. And the board, it's something we talk about. It's something we talk about a lot. But I think it's Vanguard's view is that this is the right place for us to be. And we agree.
So Vanguard must be pretty bullish on the market then, on equities, on the U.S. equity side, for them to be recommending that we have this much.
Well, let's
to
define.
say that's the equity market.
Okay,
Because they wouldn't obviously be thinking that we're going to be going down, because obviously our fund would take a lot bigger hit.
Well, so let's talk about that a couple different ways. One, define bullish, right? The goal here is to beat a 7% discount rate, right, without taking excess risk, right? To be a prudent investor, allocating across a diversified portfolio that strives to beat its discount rate annually. So that's that's where we would broadly like to go. Second thing is we have a very long-term view. It's easier to have an allocation toward equities when you have a long view, you have a longer term view, than when you have a shorter term view, meaning when you might need the money. I think the rule is the closer you get to your retirement age, the more conservative your personal allocation goes. I think we view that there is still plenty of years ahead for these funds, for these pension plans, to maintain the exposure that we're at. The other piece is fixed income has not been a great place to be invested in. Interest rates are low. It has not generated the returns. And so our ability to get to beat the discount rate, the expected return, would be quite different without, it'd be a different environment if we had higher interest rates, and we can invest in fixed income to a higher level.
All right. But I'm not understanding, I guess, the fundamental question I'm getting at is then why wouldn't we do the same thing on the pension side?
Oh, the thought there, the thought there on the pension side is the funded status, right? So the pension funds are over 80% funded, and OPEB is quite a bit below that. And so there's a view that, that you can take a little more of a risk on the OPEB by being a little overweighted equities relative to pension, to give you an opportunity to generate the returns.
But isn't that kind of like what I said earlier? Isn't that kind of like chasing a return to try to grow it? I mean, we've made great strides in the OPEB fund, and we're on track under the actuarial, the ADAC board, hit that at a certain point. I mean, we're right on track, and I don't understand, why the differences would be in the different accounts. Otherwise, what you said is that we're trying to get up there as fast as possible, so we're chasing returns by staying invested in equity.
Yeah, I didn't say what we're chasing. I didn't say we're trying to get there as fast as possible. I think this is all being done in kind of a prudent way with a very large and capable co-fiduciary with us. And the view of the JRIB, it's not just my view. The view of the JRIB is this is the right place to be allocation wise. But I'm happy to bring your thoughts back to the next JRIB meeting.
Thank you. Maybe I'll even come bring them myself.
Please do.
I appreciate it. Thank you.
So I'm talking into mute. Thank you, Mr. Walsh. Mr. Testani.
Yes, thank you, Chris. Hi, how are you tonight, Carolyn?
Good, thanks.
Just a quick question. Mr. Walsh alluded to this, but in your report, it talks about, in your presentation, I should say, it talks about inflation, and there is sort of a forward-looking statement, for lack of a better way to say that, in your presentation. However, I just was curious, how did Vanguard and how does the JRIB, how did they react to this inflation rise, likely temporary, slight inflation bump expected in the U.S. it does say it expects to surpass 2% in the coming months. I just was curious, number one, how did they arrive at 2%? Number two, how and is the JRIB considering this for what it could do in terms of the weighting of the investments? It sounds like it's pretty set with regard to how they invest the funds themselves. I just was trying to get a little bit more of an understanding of what they expect the inflation piece of this to have an effect on.
Well, I don't know if I'm going to be able to answer your question directly because you know it might make sense to have Brian Binkley from Vanguard to be able to address those specifically. What we talk about with inflation and their presentation is on a couple of different levels. One, it's below the threshold where it would cause us to think about reallocating the assets because of inflation. Secondly, the vehicles that we're invested in, the total return, the total stock, we're effectively invested in the total US stock market, right? It's the total market equity product. And so there will be a large sector of the economy that will benefit in some form from inflation. There might be sector rotations that come through. We're not seeing, I don't believe Vanguard feels we're at a point where we would have to allocate away because of an over concern of what inflation might do to the returns. The third thing, what work they do. I mean, Vanguard's one of the largest investment companies on the planet, and they bring to us the benefit of their full teams of economists or statisticians and econometricians that funnel into their view on where inflation is. And every month they adjust it, right? It hasn't moved much. Right? We haven't seen it move really much at all. It stays very much below a threshold at which they feel that we have to allocate.
What, I just out of my curiosity's sake, what is the threshold? Is that part of the JRIB, you know, like kind of overtures that you look at, or what is the threshold?
So
Or is there one?
we don't have a threshold. We don't have a threshold. In a way, we're waiting to hear a little bit. We rely on our OCIO for that.
Okay.
I think we could probably answer that two ways, right? One is going to be the absolute number, and the second's going to be the rate of change to get to that absolute number. And those are things that markets would react to.
Right.
Too much too fast might result in a different conversation than over time, a nice slow and steady as she goes.
Okay. Makes sense. Thank you so much. It's good to see you. Thanks for coming tonight.
Thanks.
Thank you, Mr. Testani. Any other board members? Mr. Fogel.
Yes, right out of the gate. And I'm here mostly to listen and learn, so I don't want to be obnoxious and start asking questions at my first meeting. But this is something I know a little bit about just from my experience with an investment business running that. So at first I was going to ask you about the 75% cap because I was looking at the pension numbers, but I understand now that's the separate fund, the OPEB,
right,
and it's managed differently. So I understand why it floated up and hit the 75%. I guess now I don't have a ton of experience with government funds investments, but the 75% does seem high to me. And I don't know if you can comment on what other similar funds is that typical today? I guess you said Vanguard's a co-fiduciary, they're recommending it.
Yeah.
It does seem aggressive to me, but maybe not.
Yeah, 30 years of being an investor, for me, it's a big allocation toward equities. It feels from where we've come from, if you will. But it is the number that they recommend for this portfolio. And they, will rebalance to keep it at that number. As needed. I mean, the target is 70%, not 75, right? And so it's floated up, and it's time to bring it back. But that's
Okay.
what they see. Now the pension, remember the pension, that target is 55%.
Understood. Yeah. And that seems like, to me, public funds, that's about where I would expect them to be. But okay, that's one question. The other one is about the private equity investments, particularly because you mentioned possible future allocations to private equity. So I was looking at these investments, and we don't need to get into the details, but the Lexington 2 fund, for example, which it looks like was the first time, not you personally, but someone allocated to the Lexington fund. I mean, that fund didn't perform very well. And at first I thought it was the financial crisis, but the allocation commitment was made sort of at the tail end of that. So, but we keep allocating to subsequent Lexington funds, 3 and 4. Is that a fund of funds actually?
Yeah, Lexington's
Okay.
a fund of funds.
All
as
right, that
is-
makes more sense.
Okay, they're
Okay.
both fund of funds. Lexington's a secondaries portfolio. It's not primaries, it's secondaries.
Okay.
Right, so that's going to be a little different return profile. In exchange for that little different return profile, you get a little better. The fund, the duration of the fund's a little shorter.
Okay.
Right,
That-
Mesero being a primary private equity group, fund of funds, right? I mean, that's a 15, 16-year commitment before that fund works all the way through. And both funds are, by the way, in distributions at phase at this point for us. And we haven't allocated in over a year, a little more, to private equity because we wanted to get the transition to Vanguard done. And we, in fact, this past month had Lexington and Mesero and our real estate fund principal in presenting to us, just giving us an update of where they're at. Both Lexington and Mesero, as I said, we're receiving distributions from that at this point.
Yeah. So would you consider other funds? I assume you would, besides, yeah.
Of
Okay.
course. So, so Vanguard has a relationship with HarborVest. And if we were to invest more invest an allocation toward HarborVest, we get the benefit of Vanguard's research teams, right? And they've got hundreds of people looking at funds. Or we could stay with Lexington and Mesero. They're both open with new vehicles, looking to close by year end. It will be the topic of a conversation at the next JRIB meeting, what to do about the private equity exposure.
Okay.
So, but I don't have any answers for you right now. It's about 3 months or 4 months worth of work that we've put into it, trying to understand the exposure and those funds better and what our options might be.
Okay.
And happy to have you come. Truly happy to have you come to the meetings.
Okay.
You're going to private equity. That'd be very helpful.
Okay. Great. Thank you.
Okay, thank you, Mr. Fogel. Any other board member questions? I don't see any. Ms. Tribuco, thank you very much, and please convey our thanks to your board for their time and dedication.
Will do. Thanks, guys. Bye.
Great. On to agenda item number 4. To hear, consider, and act upon a resolution as recommended by the Board of Selectmen pending its approval on May 17th, which I did hear from Mr. Schmidt was approved, on further amending and restating a resolution entitled, open quotes, a resolution appropriating $3,088,000 for the costs associated with construction of berm and pumping station and authorizing the issuance of bonds to finance such appropriation, end quote. To increase the amount of the appropriation to $9,607,765 and the bond authorization to $5,975,663. May I have a motion to put this before the board? Mr. Testani, seconded by Ms. Marmion. Thank you. I see Mr. Staffstrom, thank you for being here. Our CFO, Mr. Schmidt, is here. I would direct the board to your backup. I think it's, I spoke to Mr. Schmidt earlier today. If you go to slide 40 or page 40, I think that's the best explanation, at least visual explanation for me. of what Mr. Schmidt is going to lay out for us. So, Mr. Schmidt, please take it away.
All right. Thank you, Mr. Chairman. I'm going to start out and give you guys a quick overview and a very quick history. You can see the details in the resolutions, but so the first authorization was in 2015, and since then there have been a few changes in three areas, really, in all areas of the finances: the grant amount, the bonding amount, and the appropriation amount. And if you look at the preamble of the resolution, it basically lays it out almost as a timeline of what happened along the way. And as the chairman pointed out on the page that he referenced, you can see step by step the different approvals that have been granted along the way. So the cost of the project increased, very briefly, cost of the project increased from just over $3 million to just over $7.7 million, with 7.4 of that being authorized to be bonded. And that's really where we stand today at those numbers. In addition to that, when you look at the allocation of those on that page, you can see that it's heavily weighted prior to what we're proposing today. It's heavily weighted to WPCA picking up a bulk of the cost, to the extent that the town is slated to pay $385,000 of the amount, and WPCA 3.7 million, and the remaining amount would be funded through grants. So tonight, what we're here to ask for is basically threefold, and it kind of encompasses the two resolutions that you have before you tonight. The first is an increase in the authorized spending in the appropriation amount by $1.888 million. And the increase is a result of contamination. So when they started digging to build the berm and to put the wall in, they discovered PCBs. And so the additional cost related to remediating and disposing of that contamination is really adding to the amount that's required. And in addition to that, there is a reduction actually in the amount of the bond authorization from what is currently there. So it goes from 7.4 million down to just under $6 million in bond authorization, and that's the result of having the grants committed. So we have those grants to help pay for the capital. The second resolution that you have, I'll go into that just because these are closely related. Again, goes back to the allocation of the cost between the town and the WPCA. And what the second resolution does, it's a memorandum that essentially says and caps the amount that the town is going to be responsible for. It also says that the town is going to pick up the additional $1.88 million in the cost. So in the end, this $1.88 million, the town picks up 100% of that cost. But in the end, when you look at if you go back to that sheet, that spreadsheet, you see the difference in the distribution of the cost. And the way it works out is WPCA would be covering 62% of the cost, and the town would be responsible for 38%.
So I'd like to, for the board, let's please address the first bond resolution, which is which brings the new total authorization to $9,607,765. And then when you subtract out the $3,332,102 Department of Health grant, plus the $300,000 federal grant, that leaves the new total for us to bond of $5,975,000 $663. So are there any questions on the first bond? Ms. Marmion?
Thank you. I just need a point of clarification on, and I don't know what page it is. It's at the bottom of your explanation of landscaping. It follows the landscaping and then the cost of the town. And then there's a statement that says no work can be done in the remainder of site until the EPA and DEEP agrees on remedial action plan and permits are issued by Connecticut DEEP. The recommendation is to cap these areas first, then plant trees over cap. These costs should be included in overall remediation plan for entire site at a later date and removed from the hardening project. I'm confused by the process. We're going ahead with a decision to cap these sites while we wait to hear from the EPA and DEEP, and then we're going to explain the funding for this and the timing and how we decided this would be strategic to do while we're waiting to hear back on our plan.
So I believe that Mr. Marsilio or Laura Pooley are on, and they may be able to provide a little more information. I think Laura's on. Laura, you there?
And just as a point of reference, it's on page 37 of your backup, the comments that Ms. Marmion is referring to.
Thank you.
Mr. Marsilio, are you on?
He may not be on. I thought Laura was on, though.
Okay.
Well, so I don't know the exact answer. What I can tell you is that they're moving forward, and the project is moving forward. They're, as of today, my understanding is they're about 80% done with the project. And the reason that we're here is because frankly, we're running out of money, and we need to keep the contractor there and working. And so the work will continue.
Can you clarify which work exactly are you talking about? Are you talking about the capping of these projects, the remediation? Which work are you referring to that is 80% complete?
Hey, Jared, I don't know if you could hear me. I'm unmuted now, I think.
Perfect.
Yes, we
we can hear you now, Laura.
Okay, so yeah, this is Laura Pooley. I would just like to go back to explain what the planting issue is with that cap that was asked before. I think Jared started to speak. That it says no work can be done in remainder of site until the EPA and DEEP agree on a remedial action plan. The whole site is under review. So there's two separate issues going on. We have a hardening project going on, and that's continuing. And like Jared said, we're 80% complete, and this request is to finish as we go through the site, as we're putting in the sheet pile wall. They're hitting historical contamination, and so that's what the bulk of this is for. We have to test it. We have to remove it. What this note on the paper is referring to. So now the EPA is involved. I mean, they found areas where there was very high levels of PCBs. So they said, we stopped the project. The EPA was notified. They came in. It's a significant environmental hazard area in one known site. So we have to come up with a remedial action plan for the entire site, which means that wherever PCBs were found, we have to either cap it, we have to have our LEPs work with the EPA to come up with a plan as to how we're going to make it safe and keep the public safe should anybody ever get close to the wall, which in most cases they will not, because it's surrounded by a tidal marsh and it's right at the treatment plant. But and that's why we had proposed to put landscaping in around the perimeter in certain areas around Long Dean Road area, and then on the south side by Pine Creek. And the PCBs have got to be capped appropriately, meeting the requirements of the regulators, and that being EPA and Connecticut DEEP. So that plan is being worked on as we speak. That's a separate project, separate funding for it. after it's capped, then we can go in and do the landscaping, but it doesn't make sense to put the we can't put landscaping in because we can't dig where there's known PCBs down 1, 2, 3 foot deep. So that's why we're not going to do the landscaping at this time. And the timing of it is such that the EPA does not work quickly. It might be 2 years, it might be maybe next year, or it might be 2 years before they come up with an agreed upon plan. So that's where we're standing. We need to continue with this hardening. We need to get it done. We plan on finishing it by the end of August. We're 80% complete with the wall, and the critical items left to do are going to be coming up in the next couple of months to complete the project. So that's, I think that was answering that question asked about that note.
Thank you. That was very helpful.
Okay.
Yeah, I'd just like to ask a question because, frankly, I'm very sensitive to Penfield Pavilion at this point, and FEMA and the way those tasks were executed. So just to be clear, we're not going to do anything until Connecticut Deep and EPA says it's okay to do something. Is that correct?
Yes, for this separate remedial action plan that they're requiring for the overall site. They understand where we are with the hardening project, and they understand that we're near completion, and they do not want to hold us up. But we have to, like, there's areas around the perimeter on the outside of the wall that they want something to be done with the PCBs. And the best way for the town to manage it is to cap it rather than remove it. They would cap it with 2 feet of material. They would put a membrane down so that a demarcation layer, and then cap it. And then after that, we could plant it up. But you are correct. We cannot do anything until the EPA and Connecticut Deep agree on our plan and bless it. We are not going to proceed with anything that they do not approve at all.
Great. That's certainly the right answer. Okay. Anything else,
Yeah.
Ms. Marmion?
No, thank you.
Any other questions from the board? Mr. Walsh, I think you're on mute if you're speaking.
Any other questions in regards to the whole project?
In regards to the first bond resolution, which is for all intent and purpose, the whole project, yes?
Okay. No, I was just, I'm happy that the cost is being shouldered at least 38% for the town and 62%, I think, for the WPCA. That wasn't the original, the last bond resolution that we did, where I think WPCA had to pay 85% of it, and that's why I voted against it back then. And I will say that, you know, to the extent I vote for this, which I plan to, this is all just environmental stuff. It needs to be done, so we need to kind of move forward. This in no way, I don't think, I don't know how everybody else thinks, but this does not set a precedent for how we're splitting up the funding of the reconstruction of the WPCA plan, which is going to cost, you know, $80 million in 5 years or so. So I just, you know, I don't want anybody to be confused that just because we're voting on this, that's now setting a precedent on how we're splitting the funding. That's something our board will have to make a decision about as we get closer.
Very good point. Any other board comments? Okay, this is a voting item, so I'll read it again. To act upon a
I make
resolution.
a motion to waive the reading of the motion.
Do we have a second? Mr. Testani, thank you very much. All in favor?
Aye.
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 It is unanimous. 600 approved.
Thank you.
Thanks, Laura.
Okay, thank you.
Thank you very
all.
much.
Have a good night, Laura.
Okay, good night, everybody.
Agenda item number 5, Mr. Schmidt alluded to it a little bit, is to hear, consider, and act upon a supplemental allocation resolution as recommended by the Board of Selectmen, pending its approval on May 17th, which was approved today, regarding WPCA funding, Board of Selectmen approval. May I have a motion to put this before us? Mr. Testani, seconded by Mr. Walsh. First question, there was a couple questions before about this item, Mr. Staffstrom, and could you give us a quick overview of why you believe this needed to be a separate resolution from the one we just approved 2 seconds ago?
Sure. First of all, when you approved the second resolution to take it to 7 million, we did a supplemental resolution. At that time, people wanted to clarify what the town's portion of this was going to be, as opposed to what the grant portion and the WPCA portion was going to be. And so therefore, we needed to further clarify that the town's portion was increasing. The reason we did not put this into the bond resolution the first time around is honestly, we would prefer not to clutter up a bond resolution, which is in a sort of a normal form with this supplemental type of language. So what this is going to do is this is going to take the town share from the original 385 to the 385. It's going to add the 188,500 to that, and it clarifies that. It also does one other thing, and that is it specifies that the WPCA and the town will enter into a memorandum of understanding, so that it's really between the town and the enterprise fund, that's the WPCA, but a lot of our other clients do this to clarify that the WPCA is paying for the 68%, the town is paying for the 32%. The other thing this MOU will clarify is that to the extent that the WPCA asks the town to issue bonds beyond the town share, the WPCA is going to agree to reimburse the town for the debt service on those bonds. I don't believe the WPCA has made a decision yet whether to use their reserve fund to fund their portion or to ask the town to issue bonds. But if they do ask the town to issue bonds, they would reimburse the town for the debt service on those bonds, presumably from user fees.
Great, thank you, Mr. Staffstrom. I have one quick question. So this resolution will cap the town spending at $2,273,500.
That's correct.
If another unforeseen increase is seen, we would do this all over again. We would have to redo these two resolutions, would we not?
You would. You
Okay.
would.
I just want to be clear that, whatever we're doing right now is really about right now as we know it and the increased cost. If tomorrow we find out that it's another unfortunate increase, the Board of Finance would then have another look at the resolutions. So that's
right.
good news.
Right, because you actually take two steps in passing these resolutions. First of all, you approve an appropriation, so you approve the amount that's being spent, and then you approve the bond authorization. We did get a question yesterday, because it's very unusual when you see a bond authorization reduced from what you previously passed.
Right.
The difference here is, of course, when you originally fund a project, you don't always know how much you're getting in grants. So you authorize the entire amount of bonds in case you don't get the grants. In this case, we now know that we've already received the 3.6 million in grants, so we can reduce the bond authorization.
And not to mention that we're also locking down that 68-32 split, which I think is important.
Correct.
Great, thank you. Any questions from the board on this resolution? Mr. Walsh, and then Ms. LeClaire. You're on mute, Mr. Walsh.
In regards to the grant portions of this, is there anything that leads anybody to believe that we won't get any of these grants at all? Because after having lost over $4 million in grants on the FEMA project down at Penfield rebuild, gets you a little skittish on relying on the fact that we're going to get grants in the future. So, is there somebody who can give any confidence, like from a scale of 0 to 100, what we think the percentage chance we're going to get these are?
Jared, I think
My-
the grant's already received, correct?
That's
They're
my
all
understanding, yes.
Every single one's received? All of it?
That's my understanding.
Well, your understanding, or you know it's there? We have it in the bank.
I
That-
should clarify that. We did receive the funding, definitely.
I think it's been
We
received
did
and
receive
spent.
the grant money. Mhm.
Thank you, Ms. Bossy. Or was that Ms. Dooley?
You're muted, Caitlin.
Yeah,
Every
I'm-
penny of their account has been received.
I know I didn't hear you, Ms. Bossy. Could you please repeat that?
Every penny of the grant has been received already.
Great. Ms. Leclerc?
I just wanted to clarify something Mr. Staffstrom said. If the WPCA later on decides when they, whether they use their reserves or if they're done a bond, does that come back to us to approve those bonds?
No, you're actually approving these bonds, but they would only be a part of this allocation of bonds. They wouldn't add to this amount of bonds.
Okay. Okay.
Is that it, Ms. Leclerc?
Yep, that was it. I just wanted to understand that.
Okay, great. Any other questions from the board? Okay, this is, again, our second voting item. This is a short one, so I'll read it real quick. To hear, consider, and act upon a supplemental allocation resolution as recommended by the Board of Selectmen pending its approval regarding WPCA funding. All those in favor?
Aye.
Aye.
600 approved. Thank you very much. This has been unanimously approved. Okay. Thank you, Mr. Schmidt. We'll ask you to hang around for our seventh item tonight.
And I'm signing off. Thank you all. Bye-bye.
Thank you, Mr. Staffstrom.
Bye.
Thanks, John.
Agenda item number 6, to review the Board of Ed fiscal year 21 third quarter financial update. Have a motion? Ms. Marmion, seconded by Mr. Testani. I see Ms. Munsell. Good evening. I also see Mr. Peterson, and I thought I saw, oh, there he is. There's our superintendent. How are you, Mr. Cummings?
I'm good, Mr. DeWitt. It's good to see you.
Thank you. It's good to see you as well. Any comments before we let Ms. Munsell have at the update?
Just very briefly, good evening, everyone. Mike Cummings, Superintendent of Schools. I think Ms. Mansell is here to present, as you no doubt seen in your backup materials, a lot of the benefits of a lot of hard work by employees of the Fairfield Public Schools over the last quarter, which she'll bring forward tonight. And in advance, as you're likely well aware, we are in the penultimate performance of Ms. Mansell before the Board of Finance, as she has announced her retirement to us. So please be kind. With that, Ms. Mansell.
We'll be kind, and congratulations, Ms. Mansell. When will your retirement be official?
As soon as we get a replacement, sometime this summer.
So 2-3 years from now, we'll be all set.
No,
So, okay.
We're not working hard on that.
Yeah, I bet you're not. I bet you're not. Okay, Ms. Mansell, thank you. Take it away.
Okay. I'm just going to give you an overview of the projection and go over some highlights. We're no longer in a deficit situation. If you remember, the second quarter projection was a projected deficit of 1.4 million. We implemented a hiring freeze and restricted purchases at that time. We updated the projection as of February 28th, and at that time, it was a projected balance of a $500,000 deficit, but we knew that we hadn't incorporated all potential available balances So we were comfortable saying that we were safely going to balance the budget at the end of the year. But we did not release any funds at that time to be on the safe side. This being a March 31st report, because of the timing, however, being in May, we reviewed it last week with the Board of Ed and with you tonight. We used the best available information at the time, which was actual and encumbered expenses as of May 4th. So we use that information to project the expenses through June 30th to get the most accurate projection possible. So when we saw preliminary calculations that we were no longer in a deficit, we were able to release equipment funding, general supply funding, and some funding for instructional resources. We have moved RLA. We haven't moved it in the general ledger, but for the projection, we've moved RLA expenses up into the personnel category. Overall, in salaries, we have a projected deficit of 130. It would have been much worse had we not had the hiring freeze. In benefits, we also have a balance of about 350, which is also a result of the hiring freeze and fewer benefits being taken. Pupil personnel, the deficit grew, which is typical this time of year. That projected balance is 1.7 million. School balances, we projected 200,000 as a balance of savings in those different accounts, and a reduction in copying for a balance of 263. Support, we're now projecting savings in legal fees, postage, and the NEASC visit for ward, because it was virtual, was less expensive. So there's a balance there of 285. Maintenance, operation, and transportation. We have technical technology savings due to fewer system repairs and a few other things. Significant savings in utilities. There was a little bit of reduction in the distribution rate, but overall, I think it was like an 18% reduction in usage. School use is down significantly on the weekends and at night because of the COVID situation. Maintenance account, a balance of about 573 for an overall balance in that category of 1.7. As I said earlier, we released the capital funds, so we're letting the schools expend those. There's a $50,000 balance in there for special ed because that's only used for specific needs. That leaves us with an overall general fund balance of 986,000. If you go down to the non-lapsing account, the COVID account is projected to be over about 611,000. That's where we had a major swing there. You'll see that the delta in that was about 735,000. I think that's mainly because the maintenance department was unsure what the burn rate would be and all the COVID supplies that they were using when school came, back to full reopening in March. The maintenance non-lapsing account has a balance of about 218,000 for an overall non-lapsing fund balance of a negative 398. Now, obviously, we can't keep it that way. We'll have to move some of those expenses up into the general fund and balance that fund. So overall, there's a balance of 593,000 between the general fund and the non-lapsing. You'll notice after that a 200,000 reduction from that balance for food service. That's a minimum amount that we would have to give to the food service program. They lost about 111,000 last year in the program. And this year is projected to lose about 180,000. So for the 2-year period, almost a $300,000 loss. And the projected cash balance at the end of this year is a negative 120,000. I think that's about it. I think I'll stop there.
Okay. For those who haven't seen already, this is on page 44 of our backup. All the numbers that Ms. Munsell was going through. So February we were sitting at approximately in the red 500,000, and as of May 4th, we are sitting at approximately 400,000 in the black. That's the bottom line, right?
No, we're projecting on June 30th, as of May 4th, with May 4th information, we're projecting to be in the positive situation on June 30th.
But by this data, that number is $393,000, right? Okay. Any questions from the board? Mr. Walsh?
Yes. Ms. Munsell, how does the non-lapsing account, which the Board of Finance put money into that account, how does that go negative? Don't you guys have controls on that to know that there's not enough money and then you have to move money into it or have those expenses covered by someplace else in your budget?
Well, we will. We're expending, we're making these expenditures directly into that fund to properly categorize them as COVID, but because there's not enough funding in that account, in that fund, we'll have to move those expenses to general fund at the end of the year.
Okay, so does that, for the accounting for that, do you move the money into the non-lapsing account?
No,
Or
well,
I always thought that was a separate account, so I'm a little confused by how you go over on that. I understand that your COVID expenses are higher, I mean, than you thought they would be, but I thought they would just be captured in some other area of your budget once you hit the max of what the non-lapsing account was.
we will have to move those expenditures into the general fund. We don't do it as we go along because they change all the time. We will do it once at the end of the year when we know what the final number is.
Okay, so for the finance side, you guys just can go over on any department whenever you want. You're just looking at whether you're bringing your expenses in on your number for the entire year. So during the year, things can go over $1 million. There's no controls on that. You just spend the money. And as long as you bring your budget in for the total amount that was allotted, that's what really you guys do, right? That's how. Because on the town, it's different. I know the town has different departments. You can't go over. You know, there's special controls on that. You can't go over. They do. You got to figure out money or finance to move it. I understand it's all your money when we give it to you, but you just look at how you're doing on spending for the entire education. Is that correct?
Yes, as I think you already said that departments are held to their budget, but there's certain situations like the COVID and special ed that we can't necessarily hold them to their budgeted amount, and we have to make sure that overall we balance the budget.
So, and I just got confused by a couple of numbers. What's the total projected surplus you're seeing right now for June 30? Is that number the 593,668?
Overall, it's 593. We're saying that at least a minimum of 200,000 needs to subsidize the food service for a net of 393.
Okay. I also heard you say that this year they're expecting a loss of 180,000. So is that 200,000, $20,000 over, or is it in addition to the $180,000 that the contractor we have for food service says they're generally as of right
I'm sorry, I don't think I heard that whole thing.
now. Okay, sure. Explain to me how the food service works. We have a contract with the food service. What is their projected loss for this year?
It's not their projected loss, it's our account, it's our revenue. We just pay them to run the program. And by the way, I have to, should mention that those numbers that I gave you with a projected loss of the 180, Whitson's has agreed to give us, to forego 50,000 in expenses to help alleviate some of that deficit, and that has been incorporated in that 180,000.
So it was really $230,000 and they're willing to take 180?
Correct.
Well, okay. And then why is there a difference between the $180,000 loss and the $200,000 that's on line 63 in the third column?
That's just a minimum. I'm just saying that the 200,000 is a minimum. We'll, you know, as we get to the end of June, we'll have to decide how much we will actually give food service, because we still have to get through, you know, the remainder of the year and all our other accounts and our other programs.
Okay. So maybe I'm misunderstanding, and I apologize for my ignorance, but is the 180,000 on top of the 200,000, or is the $180,000 loss part of the 200,000?
The $180,000 loss is for the food service program, which is a separate, totally separate fund. The 200,000, which is the net balance of the Board of Ed budget and the non-lapsing fund, I'm saying would need to be moved into the food service fund.
Cover the $180,000 loss?
Well, more importantly, a projected negative balance of 120,000, yes.
Okay. So if you move the 200 into that account, there should be what you're estimating to be a $20,000 balance then in that account once that's done?
Yes.
And will that, say we get to the fourth quarter after everything's done, if the 20,000 is still there, then that goes to your projected balance at the end of the year?
No, that would be a remaining balance in the food service fund. That's cutting it a little bit too close. I think you would agree to leave that little amount of money in an entire food service program.
Well, we just approved a budget. How much money is going there next year?
Nothing from nothing from the Board of Ed budget.
Okay. That money comes from the public, from paying for hot lunches and things like that?
Correct. It's typically a self-sustaining operation, except for the past 2 years because of the COVID situation.
Okay. Well, we should be back from that by September, correct?
I'm sorry?
We should be back from that in September, right?
I hope so.
So I think many of our taxpayers and parents and children hope so too. All right. What was one of your biggest surprises that in these numbers that from the second quarter to the third quarter? What were the major surprises that you found?
I think the biggest one was the swing in COVID. The projected COVID expenses is a very nice surprise.
I'm sorry, I didn't hear your last. It was what kind of surprise? A bad surprise or a good surprise?
A very nice surprise.
Nice surprise. Okay, it wasn't as high as you thought it was going to be?
Correct.
Okay. And what do you think drove that?
As I mentioned, I think the maintenance department was not sure how much of the supplies, the PPE and everything else that's incorporated in there, that they would go through with full reopening in March.
Okay. So we just didn't have to buy as much?
Yeah, I would say so, yep.
Okay. Do you think we're gonna have excess supplies at the end of the year?
I don't know. I think Mr. Papa George will have to answer that.
I wouldn't say excess supplies. I would say we would have supplies to cover us through the summer school program at this point, and hopefully we won't require, but we don't know what the requirement will be in September. Hopefully nothing, but if nothing, then we will be in a very good position. If it is required for masks, we will have to restock on some.
Okay, but the funding that you have coming in from the state and federal government should more than cover that, because that summer school program, right, is supposed to be paid for with those funds, help children catch up for the ones who fell behind,
Yes.
and that covers PPE.
ESSER 2 has some funding in there for PPE.
Yes.
All right, I have no further questions. Thank you.
Any other questions from the board? Mr. Testani?
Sorry, I was on mute. Yeah, hi, Doreen, how are you? Congratulations.
Thank you.
I know you put a lot of time, energy, and effort. So I'm always hesitant to ask questions, but before I do want to congratulate you, certainly the superintendent, everybody on the Board of Ed for handling what was a very difficult, very sensitive situation these past couple of weeks. And I really, Mr. Cummings, you especially, I can't imagine what you personally must have gone through as the superintendent. I just have to say, from everything I've read and heard, you handled it expertly. This sensitive situations that the school is handling, that the Board of Ed has been subjected to the last couple of weeks. So I just want to congratulate you on that.
Thank you, Mr. Testani. I think a lot of credit goes to our staffs at both high schools and certainly to our parents and our community. I very much appreciate your words. Thank you.
Well, the only couple of questions I've had, and I've alluded to this before, and it's not a big savings. I think Dr. Parrish may have answered my question last time. However, under the IT piece, I know, and we talked about it, that I just was curious if it was implemented, that other school systems, or if the board's considering implementing it possibly for the fall, asking parents or families to pay for an insurance coverage for any kind of electronics that students may be asked to take home, which hopefully will help absorb the costs that the town is currently absorbing. Is that something that's moving forward? I'm just curious.
That is something we are pursuing, absolutely.
Okay, great. And the only other question specific to the budget, Doreen, is the special ed piece of it, which, I know I asked fairly consistently. I'm just trying to, get a grasp of it a little bit, especially this particular quarter, because it looked as though, if you read some of the verbiage, that we had the possibility of going into the red under total, into the black under total pupil personnel expenses. And then something happened. I'm not clear what. I mean, I see all the savings that the town was able to realize there. I just, was hoping you could help me to understand why we're still $360,000. Am I reading that right? In the red, Doreen? Am I right with that?
Actually, no, the projected balance is 1.699822.
Oh, sorry.
And
In the
the
deficit, right?
right,
Got
the
it. Okay.
360 is the change.
Right, gotcha. Okay. And what do you attribute that to?
If I can speak to that, Doreen.
Go ahead.
You. as you know, I've spoken to the Board of Ed and the Board of Finance throughout this year. Special ed, we've struggled with the pandemic. Many of our students had great difficulty during the closure from March to September. With the full closure, accessing learning remotely. This year, we've been meeting a lot with parents of individual students, particularly our most disabled students, and we've provided several services that students were unable to access during the closure, to make up for some lost learning opportunities. We've had an increase in, for example, tutors for reading. We've had an increase in behavioral support required for students who struggle behaviorally. We've had an increase in psychiatric evaluations because students are struggling, and we've had an increase in some outplacements. So this year, but our costs, we've struggled this year. Our staff has done a great job working with our parents and our students to try to meet the needs of our students with disabilities who, under COVID conditions, it is a real struggle.
No, and I understand. I appreciate the explanation. So you're attributing that to the $360,000 additional deficit in one quarter. Am I
The
summarizing that correctly?
$360,000 difference. Yeah, for the $360,000 difference from February 28th to May 4th, that's primarily due to a couple of outplacements, a couple of additional settlements, plus contracted services and additional services.
Right. Okay. So have you projected that moving forward to decrease? Because now, as we're heading into the summer, obviously, hopefully the COVID, regulations obviously have been changed by the governor. I believe it's starting tomorrow. I'm just want to get a sense of when you think this might have a change. That's number one. Number two, have you thought about perhaps next year's budget sort of coming up with a formula where you're sort of maybe hedging on some of these additional changes so that we're not, consistently in the red by significant numbers every quarter?
Your question and comments is greatly appreciated. I can tell you, as a special ed department, which includes me and my special ed coordinators at each of the levels, we constantly meet weekly to review student needs. This year, we were challenged like no other. I'm in year 32. I've never experienced a year like this. Next year, I anticipate, is going to be challenging too. Being back live in person is, obviously the preferred mode of learning for students with disabilities, as well as all students. We can meet their needs in person, academically, as well as social emotionally. But I do anticipate next year to be another challenging year, but I'm hopeful that will ease up over time as we get back to more normalized conditions.
And thank you for saying that. I'm just curious, how do you plan to implement that into the budget moving forward, is my question. Into the special ed
constantly
part of the
looking at our
budget, I should
programming
say.
needs, the needs of our students. We've built in additional social workers for the elementary level to meet the needs of the social emotional needs of our students, which have, they have been increasing pre-COVID. They've, increased even more during COVID, and we continue to believe that we're going to have to be responsive to the needs post-COVID. The Board of Education has approved for us to do a social emotional learning audit to look at our pre-K through grade 12 social emotional initiatives to make sure they're all aligned with one another. So we're meeting the social emotional needs, or we're trying to meet the social emotional needs of all students, and we can respond before significant challenges arise. And we continue to always look at our special ed programming needs based on the students that we have before us and develop our programs and services to respond to the needs of students at that specific time.
And I'll be the first one to congratulate you when you get it into the black, Mr. Mancusi. Thank you so much.
Mr. Titsani, if I can, I just want to add a couple things to Mr. Mancusi.
Yes,
I think you asked a really
please.
important question about moving forward. And again, as we talked about during our budget hearings, the board is supporting the creation of the Early Literacy Academy as an effort to improve reading instruction for the students who struggle with dyslexia and other issues, so that we can eventually keep those students in district and reduce our outplacement tuition costs. I think there's a number of pieces of work that also happen at the school level next year, as we identify students who are exhibiting some learning loss as a result of the pandemic, and how we have to really increase our urgency in responding to them, and how we restructure some of the school schedules and reassign staff to do that. So that's going to be part of our work over the course of the summer and as the fall begins.
Thank you, Mr. Cummings. I appreciate you saying that. Obviously part of my concern was I mentioned the moving forward piece of it, so that the special ed part of the budget, hopefully it isn't consistently continues to be in the red, and especially a swing of, over $350,000 in one quarter. So, hopefully moving forward, there can be steps, whether it be you or Mr. Mancusi takes to help to streamline it so that it's more in line with what the projected budget would be. But again, thank you all for your efforts, and for that situation last week, especially Mr. Cummings. It was very well handled, and I just want to again congratulate Doreen for her outstanding work and her contributions to the Board of Ed, and to, by association, to the Board of Finance. So thanks, Doreen, and congratulations and good luck.
Thank you, Mr. Testani. Any other questions from the board? Mr. Walsh?
To Mr. Cummings and Ms. Menzel, and I guess even to Mr. Mancusi, thanks for being here again. In regards to the revenue side, where do we stand on excess costs? Did we hit our budgeted amount that we thought we were going to be getting in for some of the excess costs? Did we exceed them? Did we come under? I mean, I know the applications have to be made and whatever, and has all that money come in, or are we still waiting for some?
We're projecting 3.5 million in excess cost. When we went to print last week, as of that time, we had not received the second payment, but we have received the initial bulk of that money. But there was like 800,000 that was still coming from the state. To my knowledge, we because it goes to the town, we haven't received it yet.
Okay, but you have no reason to believe we won't receive it, correct?
No, we will receive it. It's
okay. And I know it's kind of a guess game a little bit when you do your budget, but where was that 3.5 in comparison to what we were budgeted to get in? Do you know where that was?
I think it's right on budget. Initially, it was projected to be lower, but we did end up getting, I think, 80% of the expenses because of the increase in other cost, but the special ed transportation had come down drastically and was not part of the excess cost.
All right. The reason I was asking is because I didn't know whether, based on maybe some of the services not being delivered last year, whether there was a more intensified amount of services that needed to be supplied during the fiscal year 21 period, and therefore we may have gotten more than we thought. Mr. Mancusi, maybe you can answer that question. You're on the front line services.
Yeah. I believe we projected 3.5 and change, and we got back that. We were concerned that we were going to get a lower reimbursement because of transportation, other services, and kids not going to school full time. However, the state increased the percentage of reimbursement that we received, which was nearly 80%, and we had budgeted at 73%, I believe. So the money dollar amount came in, at 3.5, and with some change. I don't know the exact figure off the top of my head, but we had projected 3.5 and change.
Mr. Mancusi, do you know if that percentage reimbursement, the 80%, is going to stay the same for next year, or you just don't know?
I hope so. It's the highest percent that I've seen in reimbursement in several years. We projected again at 73% for next year. I don't know if we'll come in at 80%, but it would be nice if it did.
Thank you very much, Mr. Mancusi and Ms. Munsell, for that update.
Thank you, Mr. Walsh. Any other comments from the board? I just have a couple comments. I know Mr. Mancusi was hoping I would just move this along. Yeah, I'm not going to, beat up special education, but I will say that that budget is always in the red every year. And I get that this was a hard year, and I get it. The most disturbing thing for me here, and this is a wonderful team effort, because special education is over 1.7, and maintenance, operation, and transportation seem to find $1.7 million of savings. So from a team perspective, great team effort, but I really, really get concerned. And if Mr. Papa George, I know he was on here. I think he might have gotten off. I'm really concerned when I see you're giving back up $1.7 million of your maintenance, operation, and transportation costs, especially with a single line item at $572,000 to supplement, frankly, the special education budget, because those numbers are almost the same. But it is what it is. So if there's no other questions from the board and no other comments from the board, I see the chairman of the Board of Ed is here, Ms. Vitale. Sorry I didn't acknowledge you before. And Mr. Peterson, any other comments?
I don't know if we're going to be before you again, so if we do not see you, just thank you for your service this year and your support. And if we don't see you, have a nice summer. And of course, thank you to Ms. Munsell for what is the last quarterly report, quite likely that she will be giving to you. So I want to publicly thank her for her work, for all the years that she's been here, but especially for this past year. It has been the lion's share, and she has handled it with grace and always been there to answer questions and lend a hand and creatively problem solve. And we're going to miss her terribly, and just want to thank her. Thank you, everybody.
Wonderful. Yes, and Ms. Munsell, thank you from our board. Personally, you've always had the right answers. You've always had answers, and you've always done a great job of presenting this material in a way that we can all understand it. So congratulations. Okay, next agenda item, number 7. To review the town fiscal year 21 third quarter financial update. Have a motion to put this before us. Mr. Walsh, seconded by Mr. Testani. Let's see, Mr. Schmidt and or Ms. Bossy. Good evening.
Hi, guys. I guess I could start, Jared, and if you want to pop in, feel free.
Yeah, we're on slide page 51 of our backup, right?
There you go. So this is the normal format you guys are used to seeing, that kind of summarizes everything else that's kind of behind it. So as you could see, we jumped from the 3.3 back on March, which we've all talked about, which subsequently went to the 4.8. Now, I don't know whether you've seen details of the 4.8, and the 4.8 being the amount that was kind of displayed for the RTM budget meeting. So the 3.3 jumped to the 4.8 basically for three major reasons. First being the tax deferment was over, as we all know, early April. That brought in about $1 million more in favorable revenue than we thought. So the 1.6 from the March grew to like a 2.6 favorable variance for current, prior, and interest. So that really was the bulk of the change from the 3.3 to the 4.8. The other two pieces that contributed to it were about a $300,000 favorable increase due to conveyance. As we know, the real estate market is booming. So that's the upward projection there by $300,000, which really helped out. And so that was about $1.3 million of that favorability. So if we jump from the 4.8 now, as you can see, it's slightly better than that. It's a little less than $5 million. Again, a lot of these numbers are familiar, so I'll kind of look at that right-hand column. And again, as you can see, the current prior year and interest is driving the bulk of that favorability for the $2.6 million. Investment income got a little bit worse from the negative $1 million that we talked about basically since Q2 to down $1.3 million as those investments are rolling off. We just can't get the rates that we had been getting in the past. Let's see, conveyance, we just discussed that favorable again. You're going to see a new line on this one, building permits, which we had a long conversation about building permits / fire marshal fees in the first quarter. As you guys remember, we had projected a negative, and I'm kind of lumping those together because it's kind of the same project and they kind of go together. So that negative 250, I met with Mr. Conley, who's still doing some part-time stuff as his predecessor was getting on board. Spoke about a few projects, as did Chief McCarthy on the fire marshal fees, because again, they go hand in hand. Few of them have, what they're thinking are going to come into the fiscal 22 year as revenue. The ones that they had both mentioned were a few of the apartment complexes coming up, the Umpqua, Park Avenue, the Masonic Home, as you guys have probably seen in the news, and Thorpe Street are some of the bigger projects that their feeling is that revenue will actually land in 22. So that negative 250 is a new revenue number that you guys haven't seen this year so far. Ecc Subsidies, as we've talked about all year, the delay of the center is keeping that $1 million in revenue unfavorable, as we're not going to get the subsidies in from Westport, the state, and partially in King. The other jump in revenue, which is part of the 4.8 that I neglected to actually mention, is the park and rec revenue. As you can see, that went up significantly from the March numbers from 628 to 950. And speaking with Mr. Calabrese, basically there's three reasons for this jump. The golf courses, as we've been talking about all year, are booming, hard to get a tee time. They've both opened up on March 20th. So they've been just rocking it with the revenue. So he's expecting another over 200,000 on the revenue golf side for both courses. In addition to the golf, we have some good news in that the pavilions are now going to be opening. So he has on the books as of today almost 100,000 in parties between Jackie and the main pavilion that he's thinking are actually going to be hatched. So there's another additional 100 and a smaller field rental fee he's thinking is going to go up as unexpected revenue. So that was the jump from the 628 to the favorable 950 on the park and rec side. Fire marshal fees we spoke about. He's kind of going back to the negative 125, which he was kind of close to back in Q2. The last three items on the revenue piece, really, you've seen a lot. There's a state revenue schedule that's right behind this one in your packet. Again, really close. Some actuals came in. We're going to be under by $10,000. The CRS COVID revenue, that's money that we received, $633,000. When we knew about that back in March as well. We are still waiting on the storm ECA reimbursement. We've submitted, and we have not heard anything back yet. Those expenses are going to see are down below too. But on the storm side, not that I want to kind of jump to the bottom of the page, they are allowing us to file for not just the normal overtime and materials, but they actually allowed us to file for straight time and for our equipment usage. So that made that number jump. Now, whether we'll actually get the money or not, we don't know yet. So that storm numbers are not in any of this because it's not in the bank, and it's just an unknown at this point. Our other revenue is in the kind of the sheet right behind the state revenue packet. A lot of smaller accounts that just kind of added up to, it was a negative, like 78,000, which is kind of a conglomeration of about 50 different revenue accounts. That now we're projecting it to be a little bit worse due to basically a lot of fines that we're not getting, clearly from police and library. They just didn't know at the time, and we're just not seeing it. So the revenue is actually went from like a 1.7 projection in March up to like a favorable 2.6. So that's kind of the revenue piece. Do you guys want to stop there, and we can discuss any revenue questions? I mean, we've kind of gone over a lot of these figures. So, but if you have any questions, or I could move it on to revenue or expense.
Sure, we'll take. Anyone from the board have a question on the revenue side of the town?
I feel like we've analyzed this third quarter like 3 or 4 times in the last 30 days. So I feel like it's become a daily report almost than a quarterly. So I think we're well on top of all of these figures. So I've never seen a quarter so analyzed in my life. But I appreciate it. I appreciate all the hard work. Thanks, Jared. Caitlin.
I mean,
yes,
really,
I would agree.
The only thing that's really new tonight really is the building permit. Really, the negative 250 is really the only piece. And again, that's just a timing. It's just a timing issue between fiscal 21 and fiscal 22. So hopefully we'll realize that in the 22 budget. Okay, moving on to expenses. Again, a lot of the familiar numbers that have just been tweaked a little bit since March. Vacancies. We got a little more favorable just due to the timing of the hiring of the new people in the bureau, and there's been a lot going on figure kind of all year. But we're projecting about $1 million in savings there. Part-time number has gone up 175 or so, more favorable. Largest chunk of that number, as you guys can imagine, is the library. She just didn't know what the timing was going to be in terms of opening back up. I did reach out to Helene. They are opening back up. They're kind of staggering between Woods and the main branch so that she's able to move people around, the full-time people. In that the library, the Woods branch is kind of open in the morning from 9 to 12, and then the main branch sounds like it's opening from like 1 to 4, basically. So she's able to move those people around. So the part-time savings has been significant this year at both the libraries. The other large chunk of the part-time is the senior center in the busing and the fostering with that. The senior center has been closed a little bit. Park and Rec, the expenses slightly worse, again, due to the increased revenue of the golf courses, but for the most part, just needing more part-timers up there. Crossing guard specials, a little bit more favorable because it was a projection of a negative 150. And again, this is due to the school, how that they're open full time now, so they don't need that the crossing guards at noon because it was the hybrid model. And so that was that. ECC, again, just tweaking the numbers really. Again, the center hasn't been open, so those are savings of 800,000. Went up slightly from 723 in March. The solid waste, that was a first quarter event with the overtime, the second compactor going in, so that remained the same at 38 as both compactors are up and running. And the other expenses went up almost 300,000. And again, it's a conglomeration of a whole bunch of accounts that you can see on the expense report that's in your backup as well. But for the most of it, which was kind of nice to see, is electricity. Almost 200,000 of this is savings in electricity between our main account and FTC. actually, the electricity for FTC, because they haven't been open as well. And some UI loans that have now have been exhausted. So a lot of that is electricity, and the other piece was just because we didn't in March want to say that there was going to be no more snowstorms, is the overtime for DPW was about 60,000 favorable as well, due to less storms as predicted. So those kind of make up the operational savings of the 2.4. If you scroll down to the non-public transportation piece, as we spoke about in March, that number hasn't changed. They're expecting about 600,000 favorable in that account, and that comes straight from Federal Public Schools analysis of that. And the last two items which have been on here all year basically are the storm costs and the COVID costs. So those have already been incorporated. And again, we have all of our COVID revenues up top. It's the storm that I have not factored in yet because I honestly don't know how much we're going to be getting back from FEMA, but that was submitted for reimbursement. So if you add up those three more items to the operational, it's about a $2.4 million favorable number on the expense side. If you add that with our favorable revenue of the 2.6, we're up to almost $5 million. So nothing budgeted for contribution this year, obviously. And I just wanted to kind of put it in your head that don't forget, you guys have already kind of used $1 million of this in your last meeting that we transferred out for the litigation for the parking deck master plan and for the Pequot roof. So in effect, about $4 million has been transferred already to be used for those three items.
No, that's
again,
a good
there's
point.
A lot more details, but yeah. So the 5 is really 4 at this point, you know, and it could still change a little bit. There was no real number that really jumped out from doing this in May and subsequently from March. So that's about it.
No, that's a very good point about the about $900,000 that last allocation. That's not reflected here. So,
yep.
But of course, it hasn't been. It shouldn't be on here because we haven't actually done it yet, but we've kind of allocated, right?
Well, you guys did a transfer, but this is supposedly as of March, so I didn't want to. But
sure.
The transfer was made on May 6th as you're voting on it. Yeah.
Oh, that's right. Okay, so yeah, because this is the data as of March 31st, so that's why that wouldn't be included.
Yeah.
Got it.
I mean, it is the third quarter, but if there was anything that I've learned about since March, like Doreen kind of alluded to, I would have put it on here. But these are pretty solid as of now.
Great, thank you. Any questions from the board on revenue or expense? We're just sick of hearing how much money you're going to give us back, Caitlin.
And I'm kind of sick of talking about it. So.
I bet you are. You only got a couple more, 45 more days, you'll be all done with this, right?
Right, that's true.
At least we don't have to adjust the mill rate tonight, Caitlin.
I know. So the hard part's behind us now. Now we just kind of see where everything falls.
Exactly.
Right, it's just actuals from this point forward. Okay, well, if there's no questions from the board, I'll say thank you to Ms. Bossy and thank you to well, Mr. Schmidt will stay on, but thank you, Ms. Bossy, for the
yes, thanks, Caitlin. Nice job.
Okay. All right, not a problem.
Thank you.
Great. Agenda item number 8, to hear, consider, and act on any communications. Mr. Schmidt, do we have any?
Nope, nothing to report.
Wonderful. Just a quick reminder for everyone, our next meeting is June 1st, just a couple weeks away. That will be our last meeting before our July and August break, if you will. Not sure, we won't meet in July and August given what's going on with the fill pile stuff, but as of right now, we don't have any scheduled meetings for July and August. So I'll take a motion to adjourn. Oh,
Chris,
sorry.
I'm sorry. Is it June 1st or June 2nd? And this is my own fault.
I believe it's June 1st.
Okay. I had it wrong in my calendar. I'm sorry. Okay.
That's what our schedule says. I just checked it a minute ago just to make sure.
Got it.
Okay. All right. Do I have a motion to adjourn?
So moved, Mr. Chair.
Seconded by Ms. Marmion. Thank you very much for coming tonight, everyone, and good night.
Nice job, Mr. DeWitt. Thank you.
Thank you.
Thank
Good night.
you.
Thanks.
Thanks, Chris. Thanks, everyone.